All right, we have finally seen a pullback in the Bitcoin market. This is the first pullback of some substance since we've started this ridiculous uptrend quite some time ago, and especially since things got really aggressive as we were pumping up between the 50 and 60k range. We've now dropped by 13% to the lowest point, 9% to right now, and this correction has lasted for 4 days. Those are very important numbers for us to start kind of anchoring this conversation we're going to have in this video, because this means we're finally seeing something. But I think it goes deeper. You know, the question that this is actually going to start to raise now is, are we looking at another standard pullback before we continue rallying up above the all-time high? Or is this, you know, some sort of double top, or we're going to form a double top and then it's going to be a really horrible mountain peak and we're going to drop back down? Those are really important questions to answer, and I want to tell you guys what my take on it is. And I'm doing this a lot with, you know, just kind of fresh analysis. So if you like that kind of thing, hit up the like button. Tell me what you think about the market as well down below. I'd love to hear what you guys think. But if you like this kind of fresh freestyle analysis, definitely let me know as well. Now, one of the key things I like to look at if I'm establishing, you know, is this kind of breakout real or dangerous? You know, is looking at key horizontal levels like this one right here. You know, we've got a very clear level with a very clear ceiling, back tested as support twice, and now being a ceiling again. This is a very, very clear style of strong area on the chart. And, you know, those that are jumping ahead a little bit, you're also recognizing that we've got some of the key characteristics of a head and shoulders pattern. If I go ahead and draw a head and shoulders pattern for you on this chart, you know, what you're going to be expecting as standard is something that looks a little bit like this. And one of the key characteristics of a head and shoulders pattern is that you're typically going to find the left shoulder and the right shoulder coming to the same horizontal level. That is exactly the characteristic we have displaying in this chart right now. I'm not saying we have a head and shoulders pattern, right? I mean, you know, you could draw one, you could say it's like this, and then like this, and then like this, right? So you could definitely make the case that there are head and shoulders patterns, and you can say that they're bigger than that or smaller than that. I don't care. It's not the point. The point with all of these patterns is we want to look for characteristics. We don't care about if we're forming the pattern exactly as a fucking perfect symmetrical triangle or whatever the case may be. That stuff doesn't matter. What we're interested in are characteristics. Are we seeing highs top out at the same level with a breakout in between? If the answer is yes, what does that mean? What is the characteristic this is displaying here? And to me, it's pretty clear. What we have is the market struggling to break a high, finally gathering the strength, but only producing, and this is good, but it's not amazing, only producing a 6% rise above a breakout point. The reason I say it's good is because, well, it's above 2%, I'm sorry, it's above 1%, it's above 3%, so those are our key rules for looking for a breakout. The reason I say it's not amazing is because we broke above a fucking all-time high. If we break above an all-time high, we don't want 6%, we want 60% or 600%, right? So, you know, I think that's quite an important one just to anchor ourselves with. And, you know, since we were finding resistance here and then in the middle and then up top again at the same level here at 69, that's telling us that when we managed to gain a bit of strength here, we then lost it and we're stuck at the same level again. You know, think of these markets as a tennis court. You've got the bulls and you've got the bears, right? And sometimes the bull is in the court of the bulls, sometimes the bull is in the court of the bears. When we're actively setting all-time highs and we're rallying up with a lot of strength, the bull is in the court of the bulls. When we are trending down and we are losing areas of support and flipping them into areas of resistance, the ball is in the court of the bears. And I think that's really important, because the next key discussion we have to have is, are we losing significant key levels, right? It doesn't matter if the price starts dropping by 5, 10, 13%. What matters is, are we losing important levels? What's an important level? I don't know. But $69,500, the previous all-time high that Bitcoin set going way back to the end of 2021. Let me just show you that really quickly. You know, to me, that sounds like a pretty damn key level to me. Yeah, if we're losing, in this case, 69.2, if we're losing important support levels like that, then, you know, that can be an indication that there's a little bit more strength behind this move to the downside. The other thing is the lackluster performance above the 69k level. The only trading Bitcoin has ever produced above the 69k level happened here, and it didn't last long. Until we actually got back below this level, it was only 3 to 4 days, which is not a very, very short amount of time. Again, you know, I'm talking about like the 6% breakout, right? It's good but not amazing. You know, this is good but not amazing as well. When you want to see if the price is forming a breakout or a fake out, you want to look at how long it takes the market to get back below the level, right? And if you've managed to only stay above the resistance level for 12 hours, right? If instead there's just one candle that comes up above it and then the next candle's right back down, then you know it's probably not very strong. If you're able to stay above the market for 1 day, which puts us right over here, then actually, you know, that's pretty good. If you manage to push for 2 days, there's almost no question. And if you manage to push for 3 days, you've got it in the bag, you know? I mean, you know, having above a day is a very strong sign. Now, this is only on short-term perspectives. If you're more of a long-term investor, long-term trader, your rules are going to be different. You're going to be saying, you know what? A day is good. A day is a really good start, but I need a week, you know, or I need a month, or I need, you know, volume velocity to come in after the breakout. There's going to be different conditions that different people put on this. For me, I'm very simple. Are we spending more than a day above the level? If yes, that's a good sign. And I'm a little bit more conservative in that I want to see the weekly, close as well. And if we go ahead and take a look at that weekly close, it is a very, very ugly candle. You know, I mean, this is how a top looks. You've got a massive run up, you've got a doji in the middle indicating that there's indecision, and you've got the next week. Granted, we're literally only like 20 hours into this week, so you know, and that's at the time of me recording, so there is a lot that can change. But you know, we do already have the beginning of a bearish week. Honestly, a lot of this is going to depend on indices like the S&P 500, which also looks a little bit toppy right now. Just looking at some of these dojis, this hammer to the downside almost, as well on the weekly time frame, and on the daily it looks okay. It's kind of just pausing, it's kind of just, you know, consolidating. You know, this is something I'm going to get to a little bit later on. I don't have a lot of time in this video today, so I wanted to give you guys some really quick rapid fire analysis, but I'm going to come back to you all with another video later on tonight. So if you haven't already, make sure that you are subscribed. We've just smashed through 131k subscribers as well, which is absolutely amazing. Make sure you hit up that like button as well, and we've got phenomenal offers available with the links in the description down below. I'm not done yet, by the way. I'm going to give you guys a little bit more analysis, but this Bybit offer right here is phenomenal because you are going to get up to $30,000 in completely free trading capital that you can deploy back into the market, and any profits you generate are yours to keep. And they're going to take it a step further. They're also giving you $500 on Bitcoin just to trade it, just a free $500 Bitcoin position. You barely need to do anything to get this, which is super cool. So definitely do check that out as well. Obviously, be mindful of your country's regulations, and you've got some phenomenal no KYC alternatives down below as well. Now back to the markets here. What I want to wrap this video up with, you know, before I go way more in depth on this one, I've got a little bit more time for you guys later on tonight, you know, is the kind of price action we've produced below this level, because these are also going to be strong indications of what might come next. You know, I think one of the key things, you know, you can't have a discussion about prices dropping without actually throwing a Fibonacci on the chart, right? I think one of the key things we need to do is put this drop into perspective. It's the exact first thing I did in this video, is just kind of recap what we're actually looking at with you guys. You know, and when we start to throw Fibonacci's on the chart, things get a lot less intimidating. If we look at this move that started from, what is this price level, like the $50,000, $51,000 price level, you know, and then we draw a fib right up to the top, we have clearly already responded very well to the 382 Fibonacci retracement. Anybody trading based off this retracement from the absolute low to the absolute high would have made about 7% profit. And if you're just trading fib to fib, that's still a really nice 5% range. And that's before you even look at leverage. It's actually a really good tool to use when the market has actually formed the top, because it produces very reliable support and very reliable resistance. This is one of the key tools that I use inside of the 4 Flies VIP group when I'm executing my trades. Where is it? Right here. by following these links. You can get yourself inside, and I absolutely love using it. I think it's very, very powerful. If we take a look at where that puts our 618 retracement, we've got the 60k level. I think what people need to understand is that even though I'm giving you guys quite a gloomy outlook on this market, there is no bearish hypothesis here. There's nothing bearish Bitcoin can do, really, realistically speaking, because of how bullish it's been. Anything up means that we're trending up. Anything down means that we're getting ready for a continuation. The only thing that kind of verges on bearish, in my opinion, is indeed upward price action setting all-time highs like this without pullbacks. That is dangerous. I wouldn't say it's bearish necessarily, but it's dangerous, and that's where my caution is coming from. But if Bitcoin continues to drop down, I mean, we've only got literally the best area of support on this short-term chart possible. That's the only thing we have. I mean, this is the best thing Bitcoin can do on the short term right now is come down to this level, capture some support, and then fuck off back to the sky. It's going to be exactly what it needs, a refueling pit stop. You want to take 7 steps forward, 4 steps back. It's the healthiest way to move forward in these markets, and it's what Bitcoin does all the time. Maybe the ratios are a bit different, maybe 7 and 3, whatever, but you're looking at something substantial in order to get that upward progress. So it's actually a really strong thing Bitcoin could end up doing. And of course, to invalidate all of this, and by the way, there's way more. We've got to stretch these fibs out to, deeper levels to get better readings of where this thing could be. Like, look at where this Fibonacci level is coming off the $40,000, $38,000 low. I mean, this is a really good fib. It's an incredibly important midterm Fibonacci level, in my opinion, and it's got even more important Fibonacci levels than the one I showed you previously, right? So we're going to deconstruct all of that in the very next video, so definitely make sure you are subscribed. But to invalidate all of this, Bitcoin simply has to get back above the all-time high. It's going to be very simple and very straightforward, and if Bitcoin is able to get back above that all-time high, that's it. We're back to trending up. The next area of resistance would be at about 73. I don't even know if 75k would be a problem anymore because we topped out so close to it. We hit 73.8, so 75k is only 1.1k above, 1.2k above, and that's it's nothing. It's negligible. So and that's because the price is so ridiculously high, right? Like now $1,000 move is actually a really small deal. Back at 20k, $1,000 move was 5%. So that's what I'm seeing there. Invalidation above the all-time high, reclaim this high, and then we're back off to the moon. Until and unless that happens, we're in a bear trend right now, and we need to capture better support in order to continue moving this thing up. There's so much I haven't looked at yet. I feel dissatisfied like you. I wish we could have gone through much more in this video, but I will come back to you all very soon with more in the next one. Make sure to take advantage of the phenomenal offers available down below, including some of the phenomenal alternatives to Bybit. But still, if you can take advantage of this, definitely get yourself in on a free stack of 30k trading capital that you can throw into the markets, or just that free $500 position on Bitcoin when you sign up. That would also be very, very powerful. All right, ladies and gents, thank you all so much for watching. If you have enjoyed this one, you know what to do. Like, subscribe, tick the bell, all that good stuff, and I'll see you all in the next one. Cheers.